Hey guys, and welcome to my timing is everything video, and today I'm going to show you my strategy on how I time my entries into trades. And so here we've got here is GANX, something I've been looking at a lot over the last few days, and this is one of these explosive stocks that has come from ginormous highs of highs, and it's come down, and we've got this eventually a turn of fortune for the stock. And I just want to go through why this stock has gone up in the space of November 10th to December 10th. So in 4 weeks, 20 days, it's gone up from $1.80 to $4.21. So 117% in just a few weeks. So that's kind of exciting, right? And we get these notifications about breakouts in the software, and a breakout is essentially something that's broken out through the previous highs, and that's looking at about 230 there. So why is it important not to buy the breakout? Well, in this example here, you can see that you might enter the breakout here and it will pull back depending on how deep your stop losses are, but this might stop you out here. I mean, it's quite a deep fall here of it's gone up from there and it's dropped down to here, so that's 20%. So that's going to stop you out if you've got a 20% stop loss, which is quite a wide and deep stop loss. So the timing is everything here. And if we zoom in a little bit, what we can see is when we monitor the behavior of the stock, which is always something you want to do when you see a pop like this. A gap up is generally a buy signal, or at least to alert you to a potential purchase. It generally pulls back. Sometimes it pulls back much harder, and you're wiser to examine the stock and see how far it's come back previously. So it's kind of grazing the 20-day here, and again it comes back to the 20-day. And what we've got here is it's peaking up at the top here, consolidating a little bit, pulls back, and it said, okay, this is the new support. This was the previous resistance, and when it breaks through, resistance tends to become the support. So we've got a kind of confirmation here that this is potentially the bottom, and I really like this. So I'm actually getting in here because it's confirmed to me that it won't go any lower. It might. There's no confirmation. This is not financial advice. Do your own research, but I like this here. So I'm going to do an exploratory purchase here. And what that means is I won't put my full 3% of my investment into it yet. I'll do maybe 1%, so 3% of my entire trading capital. I've got a full of $80,000, so 3% would be $2,400 US. I'll probably put in half of that, maybe 1,200, small potatoes, but that's how I like to trade. That's my comfort risk reward ratio that I like. And if I put in like a $1,200 here, perhaps it consolidates for a bit, but once it breaks out and proves that it's worthy of 420, 428 and breaks out, then I'll put the rest of my investment into it. Now stop losses are extremely important, and I was explaining to you why we wait for the pullback, and risk management. So risk management, it's not about being right every time, it's about being wrong in very small ways and being right big. And so what we want to do is we can as traders have many stop loss trades, but we want to let our winners run. So you'll find the majority of traders lose most of the time. I've got a ratio about 50-50, which I'm quite pleased with, but most traders lose most of the time. In fact, 99.9% of retail traders lose money. And so the secret to making money is respecting your stop losses and not moving your stop losses down as the stock tanks on you. You have to let it go and move on with your life. And so what I'll do is here, I'm going to enter here, it's about 405, and my stop loss will be 20%, which is 80 cents. So that'll take me right down to 320. So as you can see, 320 is pretty far away, and things would have to go catastrophically bad. I'll put my little red line in here. things would have to go catastrophically bad for me to get stopped out here. It may consolidate, it may come back down. This might be a fake out, as we call it, a breakout that isn't a fake out. But it's looking quite solid. It's gone up when the market had a down day, which proves to me that it's fairly resilient and people are excited about the stock. And I'm going to buy here, and hopefully in the next week or two it'll break the 420 and we'll be looking pretty good. So another example here of timing. So here we've got ANRO. This is a stock I got into way back in 6th of October, 337 at $7.10, and now it's looking pretty rosy, 714, almost 21, almost 300%, wow. But I got in at the high. This was a while back. I started refining my entry points a little bit. I would have gotten in here more recently, and you've got this insane explosive burst. Look at that, 354k of volume up here, 354k of volume, and then boom, almost 20 million. So someone's dropped 20 million times 7, that's 140 million someone dropped on it. So somebody somewhere knew something, if you know what I mean, and a little bit of consolidation, and it's ripping higher. So I'm going to get into this on a pullback. The RSI is looking pretty toppy. I mean, we want to be buying it around these areas of 58. So I'll maybe wait for it to come back. Remember, there's no rush with trading. Trading is generally slow and should be not really that exciting. You want to just be casually investing and not emotionally committed to trades. But again, this is a great example of why you don't really buy the explosive tops. You wait for the pullback and you buy in at $11, and then just a few weeks later you're looking pretty sweet when you've almost doubled your money in a few weeks. And so that's what it's all about. If you're done chasing breakouts and getting chopped up, subscribe and turn notifications, daily watch lists, alerts, and full recaps coming. Drop a comment, have you ever been wrecked chasing a breakout? Remember, you don't buy on the big bounce, you buy on the pullbacks, and that's where the clever money enters. Hope you enjoyed the video. Drop a comment, any comments are welcome, any feedback, etc., etc. Peace, and keep waiting for the breakouts.